Yes, I need to. The other ones were like videos on their Instagram reels, TikToks, and pictures, and then the last one was believe it or not, emails. We saw another significant house, and back and forth, and now bottle of sauce. So, yeah, I thought that was most interesting. Also, the first one was more about communication. So it's like, marketing, anybody. She said she can open
if I had the time, if I was young, single, didn't have a family, absolutely, I would be doing it. Even we didn't have a here.
yeah.
Other group.
Oh.
How are you? Good to see you. You as well.
So I just don't have the time right now, which is why.
That's some new material. She just came in and looks like. Yeah, yeah. Well,
So,
you're always good.
So,
I love brother Bryce.
yeah.
Yeah. Yeah, because if it gets empty, I'm filling it back up. Oh, okay. You can smell it now. Yeah. You can kind of go over the new version of Keller we're rolling out, and then I'll be kind of going over marketing. Yeah.
Well, I think really think that much.
That's, it's important information to know. You gotta know how. Yeah. Well, you're right. Remember, I bought my first house. 18%. You're a little worse than me. I was really really number 4, but I like the house and here in the double figures. We got 9 was celebrating weeks.
Remember.
Just starting those like yeah. And somebody gives me all this money yeah, 80% of some life is good. But we've had that right now for ever and ever. We told that most time we go on it. It's a great place. And if I didn't buy something else, then I would have it.
Yeah.
I didn't have a workshop.
No, no, they want.
House in 15, you know.
And it's not
Where you are today.
because they own. Yes. That's why when you go to which exciting.
Yeah.
Going.
Good. In for lunch. Are you still remembering the rest at the MLS? Or did you?
No, we weren't able to, you sent me those emails over.
I wanted to see if you were still in. I think I saw your name on the list.
I would
Take you off.
Yes. That would be great.
Yeah, I mean, we have to put you on and I have to take you off.
Oh, they said, I called them to update
Yeah.
all the information that they wanted me to update.
Yeah.
And they said that they had already pulled me off on it, and I wasn't using it that
I'll
much.
check my,
I wasn't using it that much. I was like, leave it like that for right now. I've already got it.
I'll double check.
That's all of them. They said that they had already taken it off. That's why I didn't move any forward with any type of action.
I'll just check.
That's it.
All right, let me see who else is out here.
That's okay. Unless they are then to go into the company, and then you can break the whole family and like, you're gonna, yeah. They want to be able to go to convention unless, you know.
Oh.
And they get like, yeah, the whole thing. So. You do or you won't. Not. I think it's totally.
Excuse me, I hate to interrupt, but those of us online cannot hear anything.
Same here. I didn't hear, I haven't heard anything. It looks like they're going to start shortly.
You know, I'm from Chicago, but I'm in Chicago. One of the ones in Chicago, but she lives in northern Wisconsin. It's like between 4 and 8, 4 hours, like 4 hours per day. It's 2 hours, and my hotel for 2 hours. It's only
you know, we're 16. I'm sorry, you freaking.
Some new cars.
7 o'clock. She's been by thousands of pieces. 8 o'clock. Yeah, but 4 hours, keep it right. No wonder she has found. So, or just to keep your porch light off and just don't even, or do it for 2 hours. And you're done. I wouldn't be, nobody meant to work for 4 hours.
When Bill was bought from Harbor. Saw maybe it's
It's a big.
so they couldn't see the city or anything. We were in the middle of it.
Really?
That was kind of fun. It was kind of, funny thing on the way back to the farm, so they would go, we wanted, I think, all that. We made down to Boston and then we got back into. With like the whole even support.
So did you, drill
Yeah.
all the way? How long did it take?
Hi, everyone. We're gonna go ahead and get started.
Hopefully it worked, right? The formula, the formula.
I'm gonna pass around a sign up sheet if everyone would just sign your name
Yeah.
or print your name, I should say. All right, welcome to Keller Mortgage 2.0. Some of you might ask, why 2.0? So Keller Mortgage has been around, I believe, since what, 1984? I think that's not quite, I think it was more 1800. Right before COVID. Okay. So Keller Mortgage was initially more of an online presence. And so now we are kind of revamping everything where, we want to be part of more of an in-office. We want to partner more with the realtor. So that's what we're calling it Keller Mortgage 2.0. So I'm Rob Norwood. This is my boss, Bill Skurvetz, he's a regional area sales manager of Ohio. And I asked Bill to join us today because Bill is going to go over a couple things where I think you might find useful as far as like inflation and kind of the Fed, what the Fed is saying. So I think that's very important. Bill also has a tremendous amount of experience. Not too many people have more experience than me. I have a little over 20 years of experience. I think, Bill, you have probably more than that.
Close to 30.
Close to 30, okay. So the one thing I definitely want to encourage you to do is utilize our experience. And I say that because between Bill and myself, that's over 40 years of experience. So we've seen the good, the bad, and the ugly. So in this market, it is different, right? It's no longer, you just kind of sit back and leads just come to you, right? So we have to get a little more creative. And today, what I want to talk about is how we can kind of help you with some tools that can, potentially make you more leads or get you more lead opportunities. So as far as lead conversion, partnering together is a one-stop shop. So Keller Mortgage was essentially founded by Keller Williams Realtors. So with that being said, we definitely look through the lens of a realtor. So we want to make sure that, that's important if you know that, because, it's really critical that, as a mortgage company, we have your interest in mind as we conduct our business. So, and that's huge. We're not just, your typical mortgage company that, hey, we just, we want to close loans. We don't care about the realtor. We would just want your business. We want to partner with you. And so that there's a couple different ways we're gonna do that. We're gonna talk about lead conversion. Keller Mortgage is a sponsor of the KW Rise Lead Program. I'm not sure if you guys are aware of that. We also have an agent portal where you can boost your productivity and stay in the loop on all your clients. And that's important because if you use Keller Mortgage, you can see everything that's happening with your clients. So you can see from the time the appraisal was ordered to the status of the loan, where it's at, without even contacting me. So you have that at your fingertips. It's a great benefit to have. I'm available pretty much 7 days a week. Because, you know, my cell phone is on my business card, so you always will be able to get a hold of me. You can text me, email me, whatever works for you. I'll always return your call. And I think that's important because, you know, in this business, you know, you have different mortgage companies, I'm not gonna mention any names that, you know, you may never talk to the loan officer. So we definitely want to make sure you understand that you will always be able to talk to the loan officer. In case I'm out, you will always be able to talk to my backup. And then we also have a pod where we have a dedicated processor. And this is also huge because being in the business as long as I've been in the business, having a dedicated team is huge because, you know, I know exactly what my processor is looking for. It's not a round robin where you might get a processor that you never worked with, and you know, it's just a really good system. So we also have personalized loan scenarios, which is huge in this market because, you know, right now we're in a market that, you know, every customer is critical. So we want to make sure that we explain things in a way they can understand. So we're going to talk about mortgage coaches, some of the tools we also have available with Keller Mortgage. Products and programs. So to remain competitive in this market, we're consistently looking, adding different products that we feel like, you know, will be very beneficial for your clients. So rest assured that we're in a position that, you know, we're going to listen to you. You know, you're like, hey, Rob, I like to see my clients are asking for this product. I'm going to go to Bill, and Bill's going to go to his, you know, his management and say, hey, this is what the realtors are asking for. You know, how can we get this incorporated? So I think that's very important to have as well. So a couple of products that I do want to point out is a 0+ program. Some of you may have heard of this program. We still offer it. This is a no cost, no fee option for your buyer. We still offer it. It's not as lucrative because the rates are so high right now, but we still have that available. So if any of these products that, you know, you want to get more information, just reach out to me. My office is right next to Mick Gordon's office, so I'm always available for questions. But some of the highlight programs, we do offer Fannie, Freddie, conventional fixed products, FHA, USDA, jumbo products, manufactured housing, and then one product we're going to talk about in a little more detail is Lock and Shop and the 2-1 buy down. So we're going to go into a little more detail on those products here in a second. All right, so as far as the Lock and Shop, one of the benefits is you eliminate changing interest rates from dampening the excitement around shopping for a new home. So Lock and Shop is huge. I mean, it allows you to lock a rate for 120 days. Now, I will tell you, just coming from a different company, we charge for a Lock and Shop. It was like, I think around $2,000. Keller Mortgage does not charge up front for the Lock and Shop. So that's huge. Definitely a benefit for your clients. And then you also can reset rate to the current market within 60 days of closing. And that's very, very important. So you have up to 60 days prior to closing to take advantage of the rates go down for which, you know, in this market, I mean, you never know. And then also we can do this for primary and secondary homes. And again, there's no upfront fees for that. So next we're going to talk about a 2-1 buy down. So this is something that's very important right now. A 2-1 buy down allows borrowers to temporarily reduce the interest rate over 2 years to help borrowers ease the home ownership. The seller and builder must fund the temporary buy down. Unlike an ARM, a temporary buy down is a fixed rate mortgage. Your payment changes on a predetermined and set schedule. So in 1 year, the interest rate is 2% less than the original locked in rate. In year 2, the interest rate is 1% less. Then in year 3, it will adjust to the note rate for the duration of the loan. But this is not a ARM product. How does a 2-1 buy down work? So can you guys see that okay? Okay, perfect. So at the time of closing, a buy down subsidy fund will be created from the seller credits. The note rate and payment will remain the same throughout the life of the loan. But this fund will allow your borrowers to have temporarily lower payment. So as you see on the graph, so year 1, your borrower will be saving $475 a month. In year two, the borrower saves $244, and then year three, it goes to the note rate wherever the loan was locked in. So in this case, it would be 5.5%. And no, these aren't today's rates, just in case anyone wants to know. So I wish they were. All right, so important qualification notes. The borrower must qualify on the payment based on the full note rate and a monthly payment. So whatever the note rate is, that's what we're going to qualify for. Not the buy down rate. So buy down must be seller or builder funded, and you must have concessions to pay for this. This is only available on conventional performing fixed rate products. And then, how does a buy down benefit buyers? Well, it provides a lower initial payment with a temporarily reduced rate. It's a great way for borrowers to use any excess seller concessions. And it also allows buyers to use extra money, monthly funds to pay off or down other debts or knock out those new home projects. So 2-1 buy down really is, I mean, it looks very good for, buyers that are really rate conscientious right now. And this is a good selling point, even from a seller standpoint. So instead of lowering the purchase price, it's easier to, it's a little more lucrative to do a 2-1 buy down. And I'll show you that here in the next slide. We're gonna skip that one. How does a buy down benefit agents? This is where, very important for you guys. It helps avoid price reductions, what I just mentioned. And it can also attract interest in an already overcrowded market. It opens the door for more buyers into the property to get homes sold more quickly. And on the new builds, it allows the builder to retain a higher sales price for other properties while still getting the property sold. Also a mutual beneficial way to use seller credits. And then just to talk about some marketing materials. So I always have some marketing materials available. So if you have listings, just reach out to me. I can get you marketing materials for your listing. One thing I would encourage you to do is, put out the 2-1 buy down, which is the first marketing document on the left side of the screen. It really breaks down the loan amount of $400,000, the rate, and it really breaks it down for the buyers to see, year one, the payment, how much I'm saving. So this is something that is really beneficial to put in your listings if you have some. And then for your buyers, it's good too to have these available. But just know I have plenty of marketing materials. So if you want some other materials, just get with me and we can kind of create some stuff as well. So. And then one tool that is very beneficial right now, I've used this for years. And then Keller Mortgage, I don't know if they recently obtained this or if they had it for a little while, but I know from just firsthand using it, this is a great tool to use because this shows, your buyers, that, the breakdown of what makes sense for me, right? Because now you have a lot of people who are very apprehensive buying homes right now. So this will break everything down. They can see what the payment's going to be based on how much they want to put down, based on the rate, based on if they're doing seller concessions, 2-1 buy down. I can do up to 4 scenarios on this. And then the nice thing about it is when I send this to your client, you also get copied on it. So you get a link and you can actually go in and see every single thing on this. So it's a great tool to have. And there's so many good benefits. So I've had customers or clients say, hey, what about this product? So I just go in, I update it, and then they can see, whatever products they want. And then it really kind of breaks it down from, a graph standpoint. And there's so many things this thing can do. I can also add a video to this where I'm actually, presenting this. And I can actually present this too while they're looking at it. So it's kind of nice. So there's different options we can do. And if you're interested in this, let me know. I can give you a little more detail. We can create one so you can actually see firsthand how this works. Yes, ma'am.
So do they don't have to be like pre-approved with you for them to use this? If I have buyers say they're kind of mulling over things right now and not sure, know the price point, but not sure. Could you go ahead and put something together to kind of entice them to maybe get into the market?
Absolutely. Yeah, that's a great question. So, this is something that I use as a tool, as an enticement tool, right? Because some people just don't know. I don't know if I can afford it. I don't know, so when we talk about overcoming objections, this is a tool that really does it. I mean, it really, hits home because, they can see firsthand how much, they're going to save or which product works best for them. And then I can also add different products, take different products off. So yes, to answer your question, I can definitely do this prior to getting.
I'll see you later today. I want
Okay.
to do something.
And just to add one thing here, Rob's showing you the total cost analysis. So we're showing like 3 or 4 different mortgage options, what the benefits are, what the costs are. But within this tool, we also have a rent versus buy. So if you have a renter who's not sure if they want to stay in their lease or start buying a home, we can kind of show the difference. And that kind of focuses a little bit more on appreciation, principal reduction versus rent being a fixed cost. That's, obviously rents are going up maybe as much, if not more, than home prices right now. And then tie in the component of wealth building, since we all know that, renting a home, you're really building wealth for the landlord versus, having your net worth go up through home ownership. So this is one aspect of it, but there's a lot of different things that we can show a buyer visually. So, especially a lot of loan officers just present and call up and say, hi, Mr. or Mrs. Buyer, I'm going to do this for you. Here's the rate, grab a pen and paper. They take notes. They don't understand everything with this. Visual learners help, unless they have something they can reference back to it. Every time they check it, you and Rob get a notification. So Rob would go over it. He can tag a video in there. They can share it to their mom and dad if they want second opinions, and we can kind of know whatever activity they're using.
Can you do this too without really without Rob calling and, if I just didn't say, hey, this as a courtesy, I want to send this to you, this is my lender, Keller Mortgage, that type of thing.
Yeah, I would definitely recommend, me having a kind of a conversation with them, just because
Yeah.
I get a better understanding of what they're looking for, right? Because the way this is set up, I can do I can do more than 4, but we can only do 4 at a time, right? So by having a conversation, I can understand kind of what they're looking for, and then I can build this based on what their needs are, right? And then just maybe show them some other things they never even thought about.
I'll get with you later to kind of give the background on this stuff. So
Okay, perfect. All right. Let's see if I have any questions. Okay, no questions. All right, so one other thing I want to mention, and this is important as well, is we do something called a rapid rescore. And I want to mention this is because, again, in this market, it's kind of like, no borrower left behind, right? So there may be customers that, we pull credit on, and let's say they have less than perfect credit. So I actually have 2 people that I'm kind of working with right now doing this. So let's say, your score is a 590, but you have a couple things on your report that need updated. So what I can do is I can work with the 3 credit repositories, and I can do something that's called, like a simulator, where I can say, okay, well, we pay this off, or we pay this down. I can see what will raise a credit score. And then what I can then turn and do is talk to them and say, hey, pay this down and pay this off. And this will raise your score to the score we need in order to get you approved. So then, once I get the documentation, I'm able to provide this to the credit reports, and then I can get the score increased. So this is a great tool to have, especially now where, it's like no borrower left behind. So there's a lot of people that, they may say, hey, I don't think my credit's good enough. Send them over to me so I can take a look and say, hey, there's just a couple things that maybe, hinder your credit score. And then there may be something I can do to help. So, but this is a great tool to have.
And you guys are going to find with Rob's tools and the tools that we can use, we can build a plan with them. And most buyers, regardless of their current credit score, are no more than 6 months away from being an approved borrower and approved buyer for you guys. So with leads being a little harder to come by, now if any of you are participating in lead source, your lead aggregators, you know, the quality of those are starting to fall as well. We just don't want to leave really any stone unturned. So if someone wants to buy, let's get them with Rob, get a plan together. We'll do follow-up. And then when they're ready to be and able to be pre-approved, we'll call you and say, okay, now it's time to show Johnny and Jenny the house. And so we'll do a lot of the work for you on the back.
Yep, perfect point. And then because mortgage loans are oftentimes sensitive, you know, this doesn't take long. I mean, it's a matter of, you know, I get with your client, I say, this is what needs to happen. If they're able to pay things off or pay things down, you know, I mean, it's the turnaround time is very fast. So, but I would encourage you to have them reach out to me because it's not always about paying things off because you can pay off a debt and it can lower your score. So I would be very cautious of, you know, telling them that, hey, pay this, pay that off. Just have them get with me and I can do a simulator to, you know, tell them exactly what needs to be done. All right, so what's the scoop on the market? So I'm gonna have Bill come up. He's gonna talk about the market. But before you do, Bill, I just wanna, I can't reiterate this enough, is that, you know, coming on board with Keller Mortgage, I think this is a great opportunity for me to use my experience to help you guys kind of grow your business. And whatever tools I have available, I would definitely help, you know, use those to help you guys grow. I would say, you know, in my experience, I mean, you're only as good as your tools, right? So definitely utilize what I have to offer. The tools that I have to offer, they're good and they're going to get better. So as we kind of build everything out, we're going to continue to fight for, you know, whatever tools we need to you know, to progress in this market. So just, you know, make sure you guys are talking to me and say, hey, do we have this? Can we get this? So we'll look at anything we can get. So, Bill, thanks.
So, thank you guys for coming in today. We appreciate it. You know, our goal here with this, as Rob said, the Keller Mortgage 2.0 is to really be a true partner for you guys, for the market center, to be available. And, you know, he mentioned, you know, this company was kind of started and created by our king realtor, Gary Keller. So our philosophies as a mortgage company very much mimic the same values and the same philosophies you guys have. So any opportunity we can have, anything that you need, any opportunity to partner with you, you know, whether that be helping you with lead gen, you know, doing first-time home buyer seminars, going to your open houses, whatever it is, we just want you to know that Keller Mortgage and Rob and I specifically are truly committed to this. So we want to grow with you, and we want you to feel that we are, you know, part of your team, and that's our goal. I just want to kind of get a feel for here. I know I was speaking to Mark earlier, and he told me about buying his first home at 18% interest rates. Have any of you guys only been in the market or been in the business for like less than 2 years during this incredible run up? Show of hands. Okay. Anybody been in the market since the last crash that we experienced in 2008? Okay, so we got a little bit of both here. Okay, well, first I want everybody to know, especially you folks that said you've only kind of been in during the run up. Yes, rates are higher. Okay, so a little background on where we were when we had 2 or 3% interest rates. How did that happen? The Federal Reserve dropped the federal funds rate, which is the rate that banks lend to other banks overnight, short-term loans, to 0. Why did they do that? Well, we were in the middle of a pandemic. COVID was shutting us down. There were, you know, businesses that were deemed non-essential, and folks were losing their jobs or being laid off. In order to, and I guess I should step back, over history, our government has really used us to control the economy. Okay, when things are bad, they lower rates and they want people to buy homes. Why is that? Well, typically an average buyer is going to probably spend somewhere over $10,000 in the first year after buying a home. Think about it. Do they want new blinds? Do they have to get a mower, washer and dryer? You know, they're going to have to hire painters. So that money ripples through the economy. You know, if I come in and I need my whole interior painted, I'm going to hire, you know, some painters. They're going to get paid. They're going to take that money back to their families, and they're going to spend it. So that kind of helps us when things are not going well. We're in the opposite situation right now, right? Inflation is high. So what do they want to do? They want to keep people from buying and borrowing, right? They don't want new homes being sold, so they increase the interest rates, okay? So during the pandemic, they took that federal funds rate down to 0. Now they're going through a plan to raise that up, to slow down inflation, okay? And everybody knows inflation's pushing about 9% right now. So what I wanted to kind of go over today is a few things. One is just kind of make sure everybody understands what the Fed's plan is, okay? And that's important because if they stick the plan, rates are not going to be quite as volatile as a lot of people expect. What happens is when they tell us one thing and do something else, the market reacts negatively to it. So the plan right now is the last meeting they hiked at 75 basis points. There is another meeting coming up November 2nd, and they've said they're going to hike it another 75 basis points. Now, obviously, that does not translate into 3/4 of a point higher interest rates for our borrowers because our rates are tied more to the treasury. Okay. So their goal is right now we're between 3 and 3 1/4, and their goal for this year is to be about 4.4 in 2023 to get 4.6. So the rest of the year, November, we're expecting 75 basis point increase, December 50 basis points. So as long as those things happen, nothing crazy is going to happen with interest rates. Okay. What are they trying to do? They're trying to control inflation. This is we're a little bit higher than 4.5%, well off the target of 2. Their target for 2023 is 3.1%. Unemployment is starting to level off, maybe even creep up a little bit. Their goal there is for 3.8% this year. In 2023, they're looking for an unemployment rate of 4.4%. Obviously, if more people are unemployed, they're not going to be borrowing or buying additional homes. And then our GDP, which is, a lot of folks are kind of debating whether or not we are in a recession. How many people think we are? Show of hands. I agree with you. They kind of twisted the traditional definition of 2 quarters in a row of decreased GDP, which we've had. But that's kind of good news if we go into a recession. Well, why would that be good news? Well, historically, if we're in a recession, guess what the Federal Reserve does to rates? They bring them down. Okay. So we're probably looking at a true definition of GDP and probably some admittance to that by our Federal Reserve and our government coming very short. Okay. Can you go to the next slide, Ron? Well, here's where I think the good news is. So when will inflation peak? That's why all this is happening. Get inflation under control. When will it peak? Well, we're probably going to start seeing that next month. Okay. This is when they talk about year-over-year inflation. We've had some incredibly low numbers in July, August, and September. So even if they had kind of controlled or brought inflation down a little bit, when they plug in our July or August numbers of 0.3 and 0.6 for this year, we would have still seen an increase, which is what happened. Okay. We get into October, November, December, you see a little higher numbers. So as long as we can just maintain our current inflation rate, those numbers should start falling. Okay. Inflation comes down, the Federal Reserve should slow our interest rate rise. Okay, because it's not an immediate impact. Like if they raise the rate 75 basis points, that doesn't mean by the next month everything happens. It's a little bit of a slow trickle. So the good news is if we can just make it through the next month, we get into the beginning of the year, we should start seeing interest rates peak and start coming back down. Now, do I expect them to be in the 3s or 4s? For those of you who have only been in the business a couple of years, guys, you got really a gift from the financial gods. Okay, it was probably more of a once in a lifetime occurrence. Hopefully, we don't have another country devastating pandemic come our way. That's probably the only way we get back down there. And just to put everything in historical perspective, interest rates right now are averaging a little over 7%. The highest they've been in probably about 15 or 20 years. But that's about where the 50-year average is. Okay, people will still buy homes. Okay, you guys, has anybody heard? I know it's probably all over the internet. You've probably heard from somebody else, whether it's another lender or another realtor, buy the house and date the rate. I mean, that's really what it is. If and that's where our tools like Mortgage Coach can come into play. Rob can show folks that you can afford the payment for what you want to buy now at today's rates. It's probably the worst you're going to see. there's gonna be an opportunity to refinance, whether that's a year from now, 2 years from now, 3 years from now. The good thing is, at Keller Mortgage, we're gonna be continually doing with every 6 months or annual reviews with our joint clients to let them know where rates are, so that when there is an opportunity, we can talk to them about refinancing. And, you know, there's ways we can structure that to be a no closing cost refinance. So there's really no risk if they can afford to buy now. So that's what we want to really stress. Anybody have any questions on rates? Okay. Well, like I said, the good news is we should start seeing a little bit of growth, okay? Wednesday, going into the Federal Reserve, if you have any buyers right now that have not locked their interest rate, I am a firm believer, I think Rob will probably agree with me, you don't want to be flowing a rate into news. Jerome Powell could say something in a press conference that freaks out the markets, right? And that could cause a little bit of a momentarily reaction that gets us a little bit of an increase in rates. So if you have anybody on the fence right now, let's talk to Rob about the lock and shop program before Wednesday. They can get 100. I call the lock and shop program our version of rate insurance, because you can lock in for 120 days at no cost. When you go in contract, you can float down one time if rates improve to a 60-day rate. So you know you're locked in at the worst case scenario. And if I'm correct, and we see in the next month or so rates come down, we can float that rate down and improve their situation. So if you have anybody that's looking to go out to shop this week, I would suggest they get in touch with Rob in the next day or so. Let him get a pre-approval, let him talk to him about the lock and shop, and get them kind of tucked into bed so that you guys don't have any fallout. You know, I'm hearing, I was in another market center here in Columbus about a week or so ago, and they said most of the loans that are the contracts that were coming back on the market were because folks had been pre-approved, the rate increases took them out of what they could be approved for, and they really had no option other than to back out of the deal. We don't want to see that. We know that the leads are too valuable right now for you guys to have a buyer that wants to buy, change their mind.
You said before Wednesday?
Yeah, Wednesday at 2:30. We'll find out. Like I said, it's the reason they kind of tell us what they're doing is so the market can prepare. So we're all prepared for 75 basis points. That's 99% sure what should happen. What I'm more concerned about is later in the afternoon, 2:30, when Jerome Powell speaks. If he gives any indication that he thinks there's going to be even more increases than the 50 basis points that's forecasted for December, or they're saying maybe another quarter in January, if he gives any more aggressive indications, then we kind of see a negative reaction. All right, Rob, how do you?
Perfect. Thank you, Bill. All right, so we do have a question in the chat. Someone wants to know, how long does the pre-approval take? So pre-approvals are very fast. So if I have a complete application, meaning, you know, I've got, you know, all the information I need, I do same day pre-approval. So that's not a problem. You know, if it's Saturday and Sunday, I can still do same day pre-approvals. Okay. I would recommend just, hey, give me a heads up. Hey, Rob, I'm sending somebody away. And then I'll look out for them. And if you want me to reach out to them, I'll reach out to them as well. So, but yeah, pre-approvals are pretty quick. Anyone in the room have any questions about anything we talked about, or just, you know, something that you want to talk about that's maybe not we didn't cover today? Any buyer objections you want to talk about, or maybe we can help you with?
Have you seen loan applications reduce? Slow down a little bit?
Yeah, definitely. And I think that's across the board. You know, we definitely seen a reduction in loan applications across the board.
What's the biggest challenge you guys are facing right now? The market, people are
Buyers. Leads.
buyers, leads, the market. What do you mean by the market?
Now that the interest rates going up, and they have this mindset over the last 2 years that you know, real estate was low interest rates, you can buy, you can get qualified. Now that the interest rates gone up, you almost have to re-educate the public and teach them that if the market's going up, then the house value is coming down. And we're seeing that in the commercial book too. It's a downward pressure on the commercial business too. I talked to SBA lenders the other day, commercial loan rates for, were 9%. So what are the rates now for residential?
Low 70s.
Yeah. But the thing is about, for me, I look at it, it's just status quo. Business, whether the market's up or whether it's down, people are gonna need to buy and sell real estate. When Ann and I bought our first house, I think it was around 18%, and we didn't die, we survived. And we refied and we kept the house. I was home building, we tore that house down, we built another house on that land. So, but had we looked at the market back in 85 like it is today and said, oh my God, it's 18%. And like, we wouldn't have what we have today if we didn't make a decision. But the market will always come back down. The market will always go back up. So it just depends on what part of the curve you're on, like we showed, what's the inflation rate. I still think it's, if you don't do it today, someone else will.
Well, I think you make a great point, Mark. I mean, it kind of showed my age, but in 2008, we went through probably one of the worst times with property and interest rates up until now. And everybody was saying it was a terrible time to buy a home. Property values were falling. If you bought it today, it was going to be 20% next year. But then fast forward to the folks that bought it in 2008, 9, 10, 11, that just recently sold. And how much did they walk away with closing?
Double equity.
It doubled, yeah. I mean, so it's the same message then as it is now. Property values will go down. Okay, here's one thing I pointed out. Two things really. One, let's talk about rates. 7% is higher than it was a year ago. We can all admit that. It's better than the 19% that most people have on their credit card, and no one has a problem using their credit card and carrying a balance from month to month, right? A credit card doesn't come with depreciation. It doesn't come with any tax benefits, right? There's no principal reduction that turns into net worth for you. So that's one thing. The other thing is in 2008, they said you shouldn't buy property. Well, I bought a house in 2008. I sold it in 2021 and almost had enough equity in the house to buy a second house if I wanted to, right? The stock market's down, depending on the day, almost 20%. They're saying our real estate prices are going at worst be break even next year. So think about it. Where would you want your money? If you have money in stocks and bonds, buy an investment property. Let somebody else pay your mortgage, because you're still going to get a better return on it than you are if the market continues to decrease. So it's just making sure that our community and our buyers really get the right narrative, because if they're just getting their news online or from mainstream media, it sounds like it's terrible, but no one looks. And before I leave, I'll get it to Rob if you guys want to reach out. Gary Keller actually put together a little Excel spreadsheet. Now, rates, I think when he did this were maybe 5.5 or 5.75 instead of 7, but it actually shows if somebody had bought a home in 2015 to today with just an average of 5% appreciation. And we know in Central Ohio, the last 2 years were a lot more than 5. How much benefit somebody would have got in the last 7 years just for buying a home, and how much money they would have put down on a new home to trade up right now. Now, obviously, it's tough for some folks to wrap their mind around giving up a 2 or 3% rate and going to a 7% rate to buy a new home, but it still makes sense. So, I'll share that with Robin. If any of you guys want to email him and he can get it out to you. But it's just a nice visual when you're sitting down and talking to buyers to say, look, that's what these folks thought back in 2015 too. And look how well they did with basically doubling what they paid for their home in 7 years. And it will come back. Like Mark said, it's sick with their cycle. There's boom times, there's flat times, and there's decreases. It's still the greatest investment in wealth building vehicle that we have known demand right now. So get the message out and we'll help you. We're kind of staying up, and the reason we like to ask these questions in the meeting is so we know what you're hearing, so that when we talk to your buyers, we can reinforce the message that it's still a great time. Yes, ma'am.
Was it your 2-1 that talked about seller concessions? And I know it's been a long time since I've run off for asking for seller concessions again. It's a big thing back then. So what are allowable as far as the percentage or the amount?
So up to below 10% allows for 3% seller concessions. So anywhere from 10 to 25%, you can go up to 6% seller concessions.
If somebody's putting 25% or down, more down, they can actually have 9.
Okay, what if they're putting,
So 0 to 10 is gonna be 3% of the purchase.
I guess it was like up to 3%, okay, because you don't want to be like too
Yeah.
greedy.
Yeah.
Because we're just easing back into it.
Yeah.
From what I.
And the 2-1 buy down, it comes up to be around 3%. So you're always going to be probably less than that 3%.
But that requires you said that program requires concessions,
Yes.
seller concessions.
Yeah.
The biggest bang for the buck though is especially if you have, I mean, we're hearing, and I'm sure you guys are too, some homes are still selling very quickly with multiple offers.
Right, yep.
Other properties, depending where they are, could sit a little bit. You know, correct me if I'm wrong, but I thought, you know, in a healthy market, it's not uncommon for a property to be on the market 60, 90 days. Now, if we're 14 days into a listing and it hasn't sold, the sellers are losing their mind because, you know, their neighbor a couple months ago sold it in, you know, before it really hit the MLS or, you know, within the first day.
And buyers are thinking there's something wrong with it.
Yes, obviously, because it's been on the market for 2 weeks. But the difference in payment is a lot less on the seller contribution than it is a price reduction. So that's where we're seeing the biggest adoption with sellers is faced with something, whatever their timeline is, 2 weeks, 2 months, it's really up to each individual seller. But instead of having to have a discussion about a price reduction, the first conversation should be, how about some seller participation? Because if it's, whether it's a 2-1 temporary buy down, or you have a buyer that wants just a permanent buy down, to get the rate a little bit more attractive. They're going to have to reduce the property less or pay us in seller contributions less, I should say, to get the same payment for the buyer as probably a 3 or 4 time greater price reduction.
So who's the ideal client for a 2-1? You know, what is the ideal?
Eddie, you know, somebody, here's the biggest benefit on the 2-1 buy down versus a permanent buy down is, let's say you have a buyer that says, I want to buy this house but I don't know if I'm going to be here more than 5 years. I might get promoted, I might get transferred, whatever the situation may be. If you do a permanent buy down where we're just taking seller contribution or even their own money and paying points to bring the rate down, and they refinance or sell within a certain period of time, they're not going to reach their break-even point on what they save in payment. The way the 2-1 buy down goes is there's a escrow fund established to subsidize that monthly interest. And if they were to refinance or sell before the 2 years is up, that money is credited to their payoff, so they don't lose it. So that's really just how we're kind of educating the borrower, and that's really where your lender comes into play, is having a lender to understand, explain options. With Rob, you know, like you said, we're kind of dating ourselves, but we have a combined joint almost 50 years of mortgage experience. Is, you know, we ask questions probably similar to you, like, you know, how long are you going to be in the home? You know, what's your family size? You know, are you thinking about growing the family? You know, why are you coming into this neighborhood? You know, is it for schools? Is it for culture, recreation activities? You know, what's important about, you know, a mortgage to you? So we'll ask all of those questions, and then we can put 3 or 4 different options together. Where a lot of lenders are, you know, the borrower calls and says, hey, I'm looking for an FHA mortgage, or I've been told I should have a conventional, you know, home ready at 3% down, and they give them what they ask for. You know, that's great, but oftentimes you kind of need a more like kind of a consultant's approach. So we dig a little deeper, and then we can use the tools to kind of show them in a presentation mode rather than just, hey, pull out a piece of paper and we give you some payments and some closing cost numbers. So it kind of helps us reinforce that as your team member, you know, Keller Mortgage goes a little bit above and beyond. Good question.
Correct me if I'm wrong, but when I think of the 2-1 buy down, I think of someone who, let's say, they know in 2 years or a year or two, their finances are changing. Maybe their child graduates college, and so they're not going to have that expense, or they're no longer going to be paying child support. So is that right? Am I thinking?
You are thinking correct.
Yeah, I think so. I mean, honestly, 2-1 buy down, it really, I think right now, would benefit anybody, right? Especially with the rates being higher, the payments going to be higher, right? As opposed to 2 years ago, if you would buy a house. So it's just, it's more enticing for a buyer right now. But yeah, to your point, that's a great scenario.
And I would just add too, at this time of the year, a lot of folks are kind of, especially if they're in a W-2 wage earner type job, they're starting to find out what their raise is gonna be for next year. So those are also great candidates, like maybe, they qualify now, but they wouldn't be comfortable with the payment, but they know they're gonna get, some of these companies are really trying to keep up with inflation, so they could be getting an 8, 9, 10% raise next year. And if they know that, they can kind of, the 2-1 buy down works because they're gonna lock in, a 2% lower rate for the first year, plus they're gonna get 2 raises before they really would get to the fully indexed rate in year 3. So those are other, very strong candidates to have a conversation with about a temporary buyout.
I think these rate insurance programs would be a really great tool to use in conjunction with some of the builders out there right now are doing price protection where they are going to guarantee that if their price drops before they close on their home, they will honor the lower price. And so if we can go to our buyers and say, look, I can help you get a great price right now that, with protection that they'll honor the produced, combined with this, that could be a really attractive situation to a buyer.
You had a question?
Yeah, how, like, what's the verbiage? How would we break that into an offer?
Convention.
Yeah, but I mean, like, right, you have something with conventional and your buyers want to ask for a 2-1 buy down.
You're really just asking for the seller concession. So get with Rob first, let him calculate how much is needed, because we
Okay.
can go in, like, if the
You
borrower
just ask for the
applies.
actual amount.
Yes.
By.
Yep. And you can do it 2 ways. Like, we could give you a number, we can convert it to a percentage of the purchase price and say we need,
Right.
2.1% of the purchase price as, seller contributions to fund a 2-1 buy down, or we could say, we need $9,000, whatever.
Okay, right.
depends on-
Okay.
That's fine.
We always know was the offer ready.
Offer ready, so what that is that's a fully underwritten application, right? So that means we've got everything, it's been through processing, been through our underwriter, and they're ready, they're good to go. So, and oftentimes it's very enticing for the seller, right? Because they're like, oh, this person's fully 100% approved. So it's just a good way to get your draw price.
Cost involved in the buyer is better for, or
No, there's no cost involved. Again, it's one of those things where, especially now where some people that are getting outbid, right? They're not winning the contract. So I think that it's just a good tool to have.
If I can just add one thing to that is let's say the majority of loan officers are doing pre-approvals based on their own experience. So they're, you send a buyer to them, they may collect a few pay stubs, a few bank statements. They might even use one of the automated underwriting systems. But they're also human and they can make mistakes. So the real benefit to the offer ready is it almost makes a buyer using financing like a cash buyer, because we've eliminated Rob's chance of a mistake or my chance of a mistake. When you go through offer ready, you're basically, what's required when you go into contract is the contract, title, appraisal, and homeowner's insurance. The 4 things that we can't get up front until a product or until a home is selected. So where you run, and I don't know if these statistics have changed, but in September, I heard in the Columbus MLS, 19% of all contracts written came back on the market. Okay. And I was told by an ALC member in another market center here in town that out of that 19%, about 90% was because of bad pre-approvals for interest rate increases. Okay. With offer ready, you can go to a seller and say, we're not taking Rob or Bill's opinion on this. Keller Mortgage has already approved it, and it's a different pre-approval. If Rob and I were to issue you a traditional loan officer pre-approval, it's basically us saying that your loan's pre-approved. With the offer ready, you actually get a certificate that you can present to the seller that says this loan has been fully underwritten by our Keller Mortgage underwriting team and is guaranteed for 60 days, or we normally only do 60 days out, and then we'll reissue them just because documents get, somebody's pay stubs expire, something like that. So it helps us position a financing buyer more like a cash buyer, because we take all the risk away from the seller that it's not going to.
is there any reason why you wouldn't encourage buyers to look at that?
The only thing is if you call us Sunday morning, you're showing the property, trying to write at 1 o'clock in the afternoon, we don't have time. If we're all working to, kind of plan for, the offer.
So like more than 10 minutes notice.
Yeah. And unlike loan officers like me and Rob, for some reason, like our support people don't work on the weekends. It's the craziest thing in the world, but underwriters, they actually think weekends are for like, playing golf and going fishing, where we still think it's an opportunity to help clients and potentially make some money.
You just can't get good support.
You can't, yeah.
So with that being said, just keep in mind, I can do same day for leaving on Sunday.
Because I've read about something like this where it is the next step of the pre-approval that's more complete as
Absolutely.
pre-office.
Yeah.
Thank you.
And we would like to work our clients to that, even if you did call us at 10, then we're showing our property at 11. Like Rob, I trust Rob enough that he's not gonna make, a huge mistake that's gonna cost you a deal. But we'll talk to the client about, let's upgrade this, go ahead and, if this offer doesn't work, let's go ahead, give you the rest of the information and let's upgrade to your offer ready. We'll get that back to your agent as well.
All right. Thank you.
I was gonna say, so if they have their heart set on 2-1, then you gotta go above that, let's look at asking price lower than most of the costs, because I still think in this market, it's still gonna be tricky to get closing costs, if there's gonna be at least 1 or 2 offers, you still have to compete, so
Yeah, and we see that they could go above ask
go above asking.
what they need. Like I said, I just like to stress to all of you guys is have that conversation with your seller before price reduction. And the big benefit there is we're protecting a few things. One is your GCI, right? We're protecting that because we all know it's based on the sale price. So if you start cutting that, you're cutting in your own dollar. The other thing is future comparables. If agents are too quick, to just automatically go price reduction, then, the next time an appraiser goes out, that's a comp. So, a 2-1 buy down, whatever the cost of that, keeping the price at or a little bit above list, helps support the next listing you get in that neighborhood.
Any other questions? Perfect.
Are there any first time home buyer programs out?
You mean like down payment assistance, or we're gonna be rolling out down payment assistance in the first quarter. Right now, other than the local ones that you might be able to get, Plum community specific, we don't have anything specifically for first time home buyers. We technically, every product is available for a first time home buyer without the down payment assistance.
If this program, the 2-1 buy down, is used a lot by clients coming up, will that keep the rates higher for a little bit longer? If the property values are not coming down?
No, the 2-1 buy down is really just, it's a workaround by lenders to try to make to kind of beat inflation right now. The key thing to keeping rates up right now is inflation and investment. Okay. The problem right now is whenever you do a mortgage, all mortgages kind of rolled into one of the government agencies and they're sold on the market as an investment, right? They call them mortgage-backed securities. So it's like buying a stock or bond. The problem right now is that investors know, because rates are so high, that these loans are going to run off a lot quicker and they won't get the return. That's why you're seeing more buyers having big points associated with their rates. Even though rates are higher, everyone's like, well, rates are so high, why am I also paying a point to get that rate? Well, it's because to get them sold on the secondary market and have more capital to keep lending right now, that's what the investors want, because they know a 7 1/4 30-year fixed rate is going to refinance 1 or 2 times as soon as they, so the 2-1 buy down is not going to keep rates up. What'll keep it up is if you don't get the inflation under control to where we have a more normal market, not sale price market, investment side of the market. Does that make sense?
Well, perfect. Thanks for coming, guys. I would say, leave you with this. So the name of the game right now, it's just educating, right? You want to educate as much as you can and use me to help educate your borrowers and your clients. So I'm available. If they have questions, let me put more research together for them. And then they can clearly see it. And, it's just, it sells itself, right? So just education, education, education is the name of the game.
And I would just ask you guys to give me a round of try. You know, we're here, we're working with you, for you. Let us show you what we can do. Let us show you the benefits of having Keller Mortgage as your partner, with your Keller Mortgage real estate business. And we can't show you that until we have clients. So whether you need help, you need a loan rescue, whether you want a second opinion, or you have a new buyer, give us a shot. Let me show you what we can do. I think you're going to be extremely pleased, and I think your borrowers will too. And our goal is to make raving fans so that we can get more referrals for you and I. So give us a shot.
Perfect.
Have a great afternoon.
Thanks for.
Thank
Oh,
you.
thank you. Answered all the questions.